Hello, everyone, and welcome to the show today. I'm really glad everybody could be here, especially those of you that are coming back, because I know that we planned on doing this event last week. We had technical issues, and we were not able to make the broadcast go live. But I was on the phone all morning this morning and got it resolved, so made sure that this would go smoothly for us today. So today we're going to be diving in. We're going to be talking about 27 mistakes that will get you denied for business credit and loans and how to get approved. Here at Credit Suite, this is one of the things that absolutely drives us crazy is that banks have this policy where they won't tell you why your application gets denied. They're not even allowed to do so. And to us, that sounds absolutely crazy. We want you to be as informed as possible to know what lenders are looking for, what will get you denied when you apply for credit or loans, so you could do your best to make sure that you meet the criteria that they're looking for to get approved. Because that's your goal, that's our goal for you, is for you to be able to apply for the financing and credit you want and actually be able to get approved, not have to go through that process of getting denied. Now, for those of you who don't know me, my name is Ty Crandall. I'm actually the CEO here at Credit Suite. And what we do is, well, we help people build business credit and obtain loans and actually offer both as a product or service. So if we can ever help you with any of those three, then feel free to reach out to us, info@creditsuite.com. That's info@creditsuite.com. Give us a ring at 877-600-2487. That's 877-600-2487. And we also have a really cool guide that maps out the exact steps of building business credit available on our website as well. It's just creditsuite.com/EIN. creditsuite.com/EIN. So I've been in finance for about 16 years, and a lot of you know me because we have a lot out there on Periscope and YouTube and a lot of other places where I do my best to give you actionable information about business credit financing and everything involved in the process to get you both. So we're going to go about an hour today, no sales pitch, none of that. It's just going to be an hour's worth of straight content, straight information. So let's jump in. Why lenders are going to decline your loan? Well, if you're looking for credit or loans for your business, there's something important that you should know. And that's that lenders and credit issuers automatically decline a lot of applications based on not meeting approval standards. You should probably already know this, right? Because when you apply for credit on, especially credit cards online, you get a pretty much instantaneous decision. And you know there's not somebody that's just operating in the background that fast to make the determination. What's happening nowadays is a lot of these things happen automatically. So there's a formula that you've really got to meet for ultimately these lenders and credit issuers computers to give you an approval versus a maybe or a denial. And if you meet that criteria, well, you often get that automatic approval or a decline if you don't. We've all been there before, right? You apply for a credit card and it says, boom, you're approved. And it often even tells you the limit the minute you got approved. My wife and I actually were just looking for a card with the most points. We found one and we applied for it. And we got an instantaneous email telling us the limit, all the information, as well as an approval online. I've also been on the other side of that coin where what happens is you apply, the wheel turns and it says, oh, you're going to be notified by mail in 10 to 15 days. And rarely does that ever turn out good. So these are the computers that are spitting out these approvals or denials based on you meeting their criteria or not. So knowing this formula is key to understanding why you may be declined, or even if you've applied in the past, why you've been declined in the past. And it's essential for you to actually get approved because, again, the computers are looking at this criteria and saying, you meet it or you don't. You don't. It's a maybe or a decline. You can either get a straight decline or it sends it to a person for a manual review. Our goal is that you get an automatic approval. Isn't hard to do as long as you know the criteria and standards that they're actually looking for. So today we're going to discuss what the lenders don't want to see and what you need to avoid to make sure that you have an application that is automatically approvable versus one that gets a manual review or decline. And what lenders do want you to see, what criteria you do need to meet that they will require for you to often get approved. By following the advice on what to do, you'll often get the credit automatically approved, which again is the goal for what we're going to cover today. So one of the most common reasons for loan and credit applications being denied is that lenders can't easily locate your business online. This is actually one of the most common reasons that businesses are declined when it comes to credit cards and loans. Is what happens is the actual computer and the lender or the credit issuer will check for your business online, especially with the Secretary of State, to make sure they can locate your business, that you have a legitimate business. So the business name on your application has to be exactly the same on what's listed online, especially with the Secretary of State. If you have ABC Corporation, listed with your Secretary of State. ABC Corporation needs to be what's on your application. If it's any different, then they may realize that there's a difference, and then that often gets you an automatic decline. So it's very important that you use the exact business legal name, including any DBAs that you have filed with your actual entity. And you want to ensure your business name is exactly the same on your corporation papers, your licenses, your utility statements, your bank statements. Everything you have needs to have exactly the same legal name. So when you go to apply for a loan, for example, maybe they ask for your bank statements. Well, if your bank statements have a different name, even again, if one of them has incorporated, the other one, your bank statements don't have incorporated, your Secretary of State does have incorporated, those things make a difference. And what happens is lenders will side on the conservative approach. So if there's any question that what they're looking at online is different than what's on your application, it results in an immediate denial. So you need to make sure that not only are all your online listings the same, but you also need to make sure, and we'll talk about more about the online listings you should verify, but you also should make sure that your licenses and your paper documents, the utility statements they may get from you to verify your address, your bank statements that actually are used in some cases for SBA loans, revenue lending, that all those have the exact same legal name on them. Now, also make sure that your business name on all other information is the same as what your online listings are too. So here is a lot of different online listings that, again, lenders aren't going to check all of these. You mainly want to be concerned with Google and Bing and Yahoo, but you need to know how many places out there list your information. 411 and Ariel and Around Me and Apple and Adventar and Bing. Just to name a few. There's brownbook.net, there's City Maps, there's City Search, there's Copilot, there's Silex, there's DexKnows and eLocal and EasyLocal. Facebook, of course, you have your contact us information on Facebook. Even your website, you have that. Google Reviews, Google My Business, Foursquare, HotFrog, iBegin. So a lot of these things, we use a service called Yext to make sure that we're automatically listed. And that's where I'm actually getting this list from, is Yext. So Yext makes sure that we're listed online the same in all these different places. A lot of lenders and credit issuers are also using a computer to check the validity of your information across many of these sources as well. LocalStack, Local.com, Local Pages, NavMill, TellNav, Topics, Topolo, Waze. All these people have your information. Yahoo, White Pages, White and Yellow Pages, Yellow Page City, Yellow Moxie, Yelp. So if you're listening on our podcast, or if you're on the live webinar, we'll put this video on YouTube channel later, and you'll have access where you can come back, maybe stop, look at the slide, and write down a lot of these information, a lot of these companies, because two reasons really. First of all, hey, why not get listed with these companies if it's free to do so? In a lot of cases, it's free to get listed with all these companies. So you might as well as put your information with as many of these companies as you can find, because it's just free advertising. It's free marketing. It gets you more access to leads without a cost. The second thing, of course, for the purpose of this event, is that you need to make sure that your information is the same across all of these. Now, there are services that do that, as I'll talk about in a minute. But again, even if you don't purchase a service to make sure you're the same, you can still manually set up your business in these. It might take some time to do. You might even want to go and do what we did. We had a virtual assistant do it for us initially. We went to Upwork.com. We hired a virtual assistant for $3 an hour. We gave them a list of all the information we wanted listed. They set up accounts for a lot of these different providers, made sure all of our information was the same. And then boom, we had a ton of free marketing and advertising, as well as our reputation being exactly the same at all these different places. So while you're checking your name with your Secretary of State, also make sure that you also have all the information necessary for your company. And I think I will go over it a little bit later, but in case I don't, again, there are two services that will help you get listed online. One is called Yext, Y-E-X-T, Yext. Another one is D&B's Credit Builder, which the price has now gone up, and there's a lot of things they may tell you it does that it doesn't do really well, but they do have a service where they can make sure all your listings are synonymous online. We like Yext. It costs us like $500 for a year to make sure all of our information is the same. But also, while you're checking your business name with the Secretary of State, make sure that all the other information that they have is also accurate, and make sure that you're in good standing. okay, and that you're active with them. Because what happens with the Secretary of State is you've got to file annual reports every year. So in Florida, it's $150 to file your annual reports. If you miss that window, it's like $500 or $600. Like if you don't file within the first quarter, then they charge you $500-600. So I've seen people not pay the $150 to file their annual reports, forget about it, blow it off. Then all of a sudden they go to do it. It's $500-600. They say, I don't have $500 or $600. They don't file the annual report and the company becomes inactive. So it's a big problem. If a lender or credit issuer does a quick search of Secretary of State, can't find you where they can find you, and they only find an inactive company, that can often get you denied. So you need to make sure you're in good standing, all your information is accurate, and again, that your company is active. And you can find all this information with your Secretary of State. If you don't know what that is, just go to Google and type in Florida Secretary of State. If you did that in Florida, it would be called sunbiz.org, but everybody's got a different one per your actual state. Okay, many lenders will automatically decline you if your name indicates that you're in a high-risk industry. Okay, so some restricted industries include ammunition, weapons manufacturing, bail bonds, check cashing agencies, energy, oil trading, finance. Now, finance is interesting because finance encompasses a lot of different actual companies or industries. So for example, we help a lot of credit repair companies get financing. And this is something that a lot of lenders can't do, but we've helped so many that we've, proven with the lenders that we work with that a lot of them will qualify and that will pay as agreed. But that is a restricted industry. Now, a lot of people say, well, man, my industry is restricted. It's credit repair. It's legitimate. It's not a matter of it's legitimate or not. It's that you're in finance. Whether you're a real estate agent, a mortgage broker, we're in the finance industry. Everybody in finance is considered high risk. It doesn't mean that you're not lendable. But what it does mean is it's harder for us in restricted industries to get financing than somebody that's not in a restricted industry. What can help you? Make your name as general as possible. Make it ABC Incorporated or ABC Consulting. Look at something that doesn't have the word loan or credit in it. Even our name, just because we have credit in our name, has created issues as we went through to apply for credit and financing. So again, when you have some kind of indicator in your name that shows that you're high risk, just keep in mind, it is a little bit harder to get financing when you're in one of those industries. Other industries considered agriculture, auto sales, courier, software services, dry cleaning, adult entertainment, general contractors, gas stations, hotels, jewelry, wholesale and retail, limousine services, real estate agents, brokers, taxi cabs. These are some of there's kind of two kinds. There's a restricted where they just will not lend to you. And there's a restricted where it's just harder to get approved. And a lot of these are just harder to get approved. Some of them, like ammunition and pawn and porn and adult entertainment, some of those are really, really, really tough to get approved at all. But a lot of these, there's an extra layer of underwriting approval that you'll have to go through, okay? So if your business name reflects that you're in one of these industries, you may be automatically declined by the computers, or it might be pushed for a manual review just because they're suspicious that you're in a high-risk industry. So let's say, for example, that you have a credit company and your name of your credit company is Superior Credit. Well, let's say you change that to Superior Consulting. Well, if you applied with Superior Credit for a credit card, there's a good chance you might get a push to a manual review just because they picked up credit in the name and think that you're in a high-risk industry. But if you met all the other criteria and have Superior Consulting as your name, you would bypass that check and you wouldn't have to get pushed to a manual review just because of your name. So that's kind of an example of how this works. So to get financing or credit for your business, you must have an actual entity, okay? A corporation or LLC does give you more credibility in cases because, again, you're not the business. With a sole proprietorship or partnership, you are the business. You and the business are one and the same. That creates an issue when it comes to liability, and even some cases when it comes to taxes you'll pay, okay? But it definitely also can be a deterrent for getting approved because lenders and credit issuers look at corporations and they look at LLCs as a little bit more credible than sole props especially. So make sure your entity is set up in the same state as your business address. We have a lot of people that try to set up an entity in a different state because, for example, California might be $600 to set up an entity. In Florida, it's $60. So we've got people that might say, well, man, I'm just going to set up my business in Florida because it's only $60. Here it's $600. Well, the problem with that is that if your address for the location application, if your address, if everything else is in another state, then it doesn't make sense that your business is set up in yet another state. And that will easily trigger a red flag and can also get you denied in a lot of cases for credit and financing. So you've got to have an EIN number, whether you have employees or you don't. And a lot of people don't know what an EIN number is. So I'll tell you, just like you have a social security number, which is the IRS's way of recognizing you in the United States as a citizen, your business has an EIN number, which is the IRS's way of recognize your business in the United States. So every business, you basically follow these steps. You think of a name you want for your business. You go to your Secretary of State and set up the company name. The next step is you get your EIN number. You'll have to have it before you can even open a bank account. So most of you already have this. A lot of you just starting your business, you might not know this, but it is absolutely essential. You've got to have an EIN number because, again, it's used to open your bank account. If you want to do any business through your bank, you're going to have it. And you need to make sure that your EIN number is the same on all of your documents. I can tell you, I am the poster child for screwing this up. And you might say, how can you screw this up? I'll tell you exactly how it happens. The Secretary of State in our state has an EIN number where they have a number that when you look online says it's my EIN. Well, guess what? It's not my business EIN. My business EIN is something completely different. So for a long time, I'm like, I don't remember what my EIN is. I'll go to the Secretary of State. Boom, there it is. This is what I'm going to put on all my documents. Then I found the original document from the IRS and realized, uh-oh, I actually have been putting the wrong EIN because what I see on my Secretary of State record is incorrect. This can easily happen. You write down your EIN number wrong or you reference it wrong, and then you continue to put the wrong number on documents that you're filling out. This is a big problem because what can happen is they could easily think you're trying to evade taxes, right? You go and go, hey man, here's my EIN. You give them one that's not accurate. Well, then what happens is the IRS can easily get it back to you and realize that you're just giving out a fake EIN, whether it's intentional or not. So that can create issues, but it's especially important when you're applying for credit and financing because in a lot of cases, they're linking the credit and financing to your business name, your business address, or your business EIN. And this is very, very important to know because when you apply for business credit, you start building business credit at places like Quill and Uline, they won't even ask for your EIN number. And you may think it's suspicious. You're like, how am I supposed to build business credit if they don't even ask for my EIN? Well, it's because they recognize your business often based on name first, address second, EIN third. So you've got to make sure that name is correct. You've got to make sure that address is correct. And you got to make sure the EIN is correct because this is how credit issuers and lenders look to find your credit report and record. And that's what they're using to make their initial approval. So you've got to make sure you have the same EIN number that's correct on all of your documents and also make sure that your address with the IRS is the same as what's listed everywhere as well. Speaking of address, you've got to make sure you have a real physical business address, one that's deliverable. It cannot under any conditions be a home address. It cannot under any conditions be a PO box. Now, they will check with places like USPS and places like Google Maps to see if you're using a home address. So nowadays, this happens automatically. Our system has the same capability. Our technology checks to make sure you're using a home address or you're not. And if you are, it'll automatically, we won't even let you move forward with getting business credit financing if our system detects it because credit issuers will deny you anyways. Look, you might be running a business from the home and that's okay. I'll talk about some alternatives here, but you cannot use a home address on business credit card or business loan applications. They'll automatically do a search, recognize it's a home address, and automatically deny you in a lot of different cases. This is something you have to avoid at all cost. Now, if you are, you'll often get an immediate decline just because they're picking up a home address. So never use a home address on your application for credit or for financing. This is one of the biggest reasons you will get denied is because they do a simple search, see you've got a home address, and deny you automatically because they see you as basically not qualified. They see you as unestablished is what they determine. So you can use a virtual address though. You may have issues getting a DUNS number with a virtual address. So a virtual address, for example, is one through a company called Regus, R-E-G-U-S. And Regus basically will rent you a mailing address. It's not like you have to pay rent on a physical location, which costs a lot more money. What Regis will do is they will rent you a mailing address. So you could say, okay, I'm going to pay you whatever, $100 a month, and give me an address I could use. The address goes back to a real big physical building in, downtown Tampa, Florida, and you get your mail there, and Regis just forwards you the mail wherever you want it forwarded. So this gives you a real physical address you could actually put on your application. Okay, but you can't use that with the DUNS number. DUNS numbers won't accept virtual addresses. So if you do try to apply for your free DUNS number, just know you might have to use your home address or another physical address. No big deal. That information isn't going to be anywhere online anyways, but just know they won't accept the virtual address for a DUNS number. Now, so you can try to stay away from a UPS mailing address because, again, they're going to know that. When they do their internal automatic search, they're going to know if you're using a UPS address. But I'll tell you that here's your options in the best order. Number one, get a real physical business address. Number two, get a virtual address that looks just like a physical address. Number three, if you can't get number one and two, settle for a UPS box. It's affordable. It will get you denied at some places, but not as many places as using a home address. The bottom line is you just can't use a home address. That's the one thing you have to avoid. A lot of applications won't even let you submit with a PO box. They're not even going to give you an option. The minute you put PO box, they'll just automatically tell you can't even proceed. So you really got to stay away from UPS or from PO boxes and home addresses. Try a virtual address if you don't have a physical location. Try a UPS address as last resort. It's more affordable and will get you denied some places, but not nearly as many places as a home address would actually get you denied. Okay. Lenders perceive 800 numbers or toll-free phone numbers as a sign of business credibility. So you should get a toll-free number. Okay. Even if you're a single owner, home-based business, it doesn't make a difference. You still want to have and give the perception of being a highly credible business. And I'm going to talk about a lot of stuff here that I've never even talked about ever on a video or webinar or podcast before. But this is one of the things that I come back to again and again. And this is why. Because you control this. What you got to do is every time you fill out a loan application, you've got to think that for every single column or question being asked, is the answer you're giving them reflect that you're credible? Are you leaving the website field blank? Are you leaving the email blank? Are you not giving them a toll-free number but a local home phone number? You want to make sure that every field you fill out, it represents that you're the most credible business. And a really highly credible business is usually a business nowadays that is doing business nationwide or worldwide, depending on the product, and they have a toll-free number. So this is easy to get at places like Ring Central for 10 or 15 bucks a month. You don't want to neglect having a toll-free number. It's very, very, very important. And you also should have a fax number. Now, most people nowadays don't use fax machines. A lot of us use what are called e-faxes, which means that I have a number that I can put in the fax number on the application. And if you ever fax it, it just comes right into my email. That's what an e-fax is. As a matter of fact, nowadays, places like Ring Central make your toll-free number and your fax number the same. And somebody's asked, well, if I put the same number on the application for fax and phone, won't that be a red flag? No, it won't. Because nowadays, that's kind of the way that it is. I can give you our main number, 877-600-2487. You can fax us there or you can call us there. Whatever you decide to do, it's a voice over IP, so we automatically pick up that it is a fax or a phone, and it either sends us an email if it's a fax or it directs the call to us if it's an actual phone. So a cell phone or home phone cannot be used. These will get you red flagged and get you denied. And don't give a personal cell phone or a residential home phone. These are absolute do nots. Do not ever think to use a home address on an application. Do not ever think to use a personal phone or a cell phone on business applications. May you get approved? Maybe. But you oftentimes won't. 9.5 out of 10 times, these are the basic things that will easily get you denied. Okay, so you also need to make sure your phone number is listed with 411. Okay, you can go to 411.com to see if you're listed now. If you've already been in business a year or more, 411 might have a record for you. If you're using a service like Yext, like we use, Yext will list you with 411 by paying $500 a year to Yext. Okay, you can also use a service called List Yourself. And list yourself, cost like 30 bucks a month, and they'll list you on 411. So if you're going to pay, you might as well as pay for a service like Yext, because list yourself could cost 350, 400 bucks. Yext is, well, it usually is higher for the year, but you can start Yext's bottom package for about 500 bucks a year and list you everywhere. So you can use one of these services to get listed with 411 if you're not listed now. Yeah, you do have to pay to do it. We've never found a way to get free listed on 411. You can't call them. You can't email them. You can't go to 411.com and try to find a link to list your information. They just don't do it. That's why lenders and credit issuers look at 411, because you can't fake it. If you're established, then you are listed with 411. If you're unestablished, you're not listed with 411. And you can't go as a startup and go, I'm going to go to 411.com and get my business listed. It won't work that way. That's why lenders and credit issuers rely so heavily on 411, because you typically just cannot get there unless you're established and 411 starts picking up your information from other sources, or if you shortcut the process by using a company like List Yourself or Yext to get listed with 411. So you also are going to get research online. You need to know this. It's going to happen 100% without a doubt. This is going to happen. When they come, they're going to search your website, and in searching your website, they are going to determine if you have a company website or not. If you left it blank on the application, that could often get you denied. And they're also going to do research about the product you're selling, the industry, those type of things on there as well. Now, Christine had asked, what if you have a business name that is similar to another business in another state? That's okay. A lot of businesses do. Business names are issued based on state. So it's very common. You could have the exact same business name as another business in another state, and that's fine. Remember, this is why what happens is they look at name first, they look at address second. So if you've ever saw us on Periscope, and if you haven't ever seen our Periscopes, you can go to creditsuite.com/scope, SCOPE, and access our past scopes and follow us on Periscope to see live ones. We often go over real business credit reports, and I often on Periscope pull somebody's credit report live right on the scope. And all I need is the business address. And you can see on those scopes, I type in the business address or the business name, and 3 or 4 or 1 listing will pop up. So Christine, if you have the same name or a similar name to 3 other companies, then when I type in your name into Experian, for example, then 3 companies would show up instead of just yours. But then I go to your address and I start typing in your city and state, and then Experian will narrow it down, and D&B and Equifax narrow it down and go, oh, okay, well, there's only one ABC company in Montana in this city, so this must be the one. So initially, the name could make it harder for them to find you because it's the same as other companies. Then they start narrowing it down by address. And if they still can't narrow it down, then they narrow it down by EIN. That's exactly how that works. So credit providers, like I said, are going to research your company online, your website. They'll learn a lot from your website, and you'd rather them get information from your website than try to get it anywhere else. So make sure that you have good information on your website, and make sure you have a website. Not having a company website is often going to get you denied. You leave that blank on an application, you'll automatically get denied in a lot of cases, because what kind of legitimate company nowadays doesn't have a website? That's the way that lenders and credit issuers look at this. You can use templatemonster.com to get templates that are like 30, 60, 70 bucks. I love it. You know, the stuff you get for 60, 70 bucks might be outdated, but you'd never tell it in a lot of cases by looking at it. You get crisp, clean website templates. Then you go to a place like Upwork.com and just pay somebody to put up your website. All you'll need is the website template from Template Monster. You'll need like a hosting account with like a place like GoDaddy, which you can get a domain for like 12 bucks, and a hosting account isn't a bunch more than that. And then you give them the content. The About Us page, here's all the content. The Contact Us page, here's the content, the information. On the main page, I wanted to say this. And when you get somebody on Upwork and you have those pieces, they can put together a website for you for 100, 200 bucks. So if you don't have a website now, chances are good you could get a website put up by using this combination I just told you about for 200, 300 bucks max to get a really, really, really good looking website. So it's important to get a company email address for your actual business. This will usually come with your website domain. So if you go to a place like GoDaddy, you know, GoDaddy nowadays will, for 12 bucks, give me a domain, and then they also will give me the email address that goes with the domain. So it's not only professional, but it greatly helps your chances of actually getting approved because you're not entering like a Yahoo or a Google or a Gmail address. Okay, you don't want to either enter Gmail or Yahoo or Yahoo or AOL. You don't want to enter those. You need to have like a professional email address. So if you look at our company, for example, our website's creditsuite.com. Our email address is info@creditsuite.com. Our company name is Credit Suite, right? So people have asked me before, does your website have to be the same as your company name? Absolutely not. Okay, I've owned a credit repair company in the past that I sold that had a different name than the actual domain. Of course, whenever I'm starting a company, I always look to make sure that domain is available because if the company becomes really big, you don't want somebody else out there to control your name.com, okay, your company's name.com, but you don't have to have your email address and website be the same domain as your company name, but you do need to have a professional website and email address put up. And again, no Yahoo, no AOL, no Gmail, no Hotmail. It's got to be, at yourcompany.com or at a professional domain.com. Okay, your business banking history is vital to your future success of ever being able to secure large business loans because look, what happens is your bank account has something called a bank rating, and how much you keep in your bank account for your business and how you manage your bank account determines your bank rating. So if you ever want to get a bank loan from a conventional bank or an SBA loan, then you've got to have a bank account and you have to manage your bank account wisely as well. And also you need to know the date you open your bank account's often the day that a lot of banks actually look at the date of your company being established. Now you can get away with credit cards, business credit. Those type of things may look at your actual entity setup date, but if you're applying for bank loans, they'll often look for when your bank account was set up. Why do they do this? Because so many people try to skate the system and get they try to buy shelf corporations, and lenders have caught on to this. So lenders say, okay, well, you can't fake a bank account. Even if you bought a shelf corporation 5 years ago, you're not even doing business unless you have a bank account. So if you just opened your bank account yesterday, well, then that's the day that we're really going to look at that you've actually established your business. So you've got to make sure that you come in and that you've got a bank account open because it's one of the things that they look at for credibility on the loan side. This isn't as big of a deal on the credit side for credit cards, but it is a bigger deal when it actually comes to the loan side. Okay, when applying for a bank loan at conventional banks, you need to have about 10 grand on average in your bank account or an ending bank balance for 90 days. Now, please heed my warning. I am not talking to you about business credit. I'm not talking to you about revenue lending loans or collateral-based loans. I'm talking about if you want to go into Wells Fargo, Bank of America, Chase, into the big banks and apply for a bank loan, which is typically an SBA loan, that in that case, they're going to look at your bank rating and you need to have this. Okay, and that's because less than 10 grand will give you lower than what's called a low 5 rating on the bank rating scale. So a lot of entrepreneurs don't know this. You actually have 3 different types of credit as a business owner. You have personal credit. You're familiar, right? TransUnion, Equifax, Experian, personal credit reports. You've got business credit with Dun & Bradstreet, Experian, and Equifax commercial. And you've also got bank credit. You can't get your bank credit scores. No one will ever tell you what your bank credit scores are, but this is an internal credit score determined by your bank that's based on how you manage your bank account, how many other accounts you have open with them, what's your average daily balance, do you have a bunch of non-sufficient funds. What's most important with your bank account is that if you have $10,000 ending balance average over 90 days, that's going to give you a low 5 rating and be lendable at your bank. But again, if you're applying for all those other types of loans I talked about in business credit, it won't matter. This only really matters when you're talking about bank credit. If you don't have that, you can still get business credit, other types of alternative loans. You just can't get conventional bank loans. You've got to make sure you have the proper licensing set up for your actual company, and make sure the address on your licenses is the same as all of your other documents as well. You need to contact the state, the county, the city governments to see if there are any required licenses and permits that you may need for your actual business. And if there are, you need to make sure that you have those necessary licenses and permits. If you don't do this, then you'll often get denied. Okay, you need to get set up with the business credit reporting agencies. We often see denials due to applicants not being set up with the business credit reporting agencies. So I'll give you an example. I don't know if this slide actually covers that or not. Okay, so For example, we've seen companies that do $1, $2, $3 million in sales that get denied for $5,000 and $10,000 credit cards. And the reason they get denied is because of their business credit. They get the denial, and the denial says business, bad business credit rating, unestablished business credit, etc. What you might not know is that the reporting agencies know you exist even if you haven't focused on building your business credit. So for example, the reporting agencies, business and consumer, all they do is get and sell data, right? That's what credit reporting agencies do. They get data, they sell the data. That's ultimately at the heart of what reporting agencies do. So they get data from all different kinds of sources. In the business world, they get it from utility companies, they get it from people that sell buildings, they get it from all different types of places. So you might have set up your phone or your water or your electric, and then they notified and gave that account to Experian, and now Experian knows your company exists. And once that happens, you get a credit score. But the credit score is really, really, really low, for example, with Experian, because you have no credit established. So then you go into your bank and you try to get a bank credit card for $5,000, $10,000, and your business does $1 million in revenue, and you're like, no problem, easy approval. And then you get denied, and you're like, why the heck did I get denied? Well, you got denied because you have a 29 score with Experian because your business is unestablished. And I'm going to show you what that actually looks like here in just a minute. So you can get a free DUNS number right here at dnb.com/DUNS/number. That's the letter D, the letter N, the letter B.com /DUNS, DUNS -number. Okay, it doesn't cost you anything to get your DUNS number. Now, when you do get your DUNS number set up, they'll ask a ton of information from you, and then they'll email and call you and tell you it's urgent, and then you get on with their advisors, and depending on who you get, there's some pretty cool people over there at Dun & Bradstreet Credibility, but their whole goal is to sell you their product. They're going to try to sell you Credit Builder. Usually they're going to try to sell it to you for about $1,200 to $2,000, and their prices actually just went up. So just keep in mind, and they will tell you they'll expedite your DUNS number if you pay them, but it only takes usually about 2 or 3 weeks to get your DUNS number for free. So don't feel like you have to pay them to activate your credit profile. That's absolutely not true. Don't feel like you have to pay them to get your DUNS number. That's absolutely not true. You could do this for free without paying for Credit Builder, but know that it might save you 2 weeks if you paid for Credit Builder, but it's pretty expensive to save that 2 weeks. It could easily cost you a couple grand. Okay, you may also want to pay for credit monitoring with Experian and Equifax to see if you have information listed with them now. So what's important is that when you get your DUNS number set up, you can also go to this link, dnb.com/DUNS-number, and they'll let you do a search through what they call their iUpdate service. And their iUpdate service will tell you if you do have a listing with DNB. So you can search iUpdate for free to see if DNB even knows you exist, or get set up with iUpdate and give DNB your number. Now, Experian and Equifax are a little bit different. Experian and Equifax will actually make you pay. They will make you pay for credit monitoring to even access your credit reports. And then they also have update services where you could dispute information with them, and you can provide them your information to let them know that you exist. But DNB does this for free through their iUpdate service. Experian and Equifax, you'd have to pay for credit monitoring to do that. If you want to get credit monitoring with any of the 3 reporting agencies, go to creditsuite.com/reports. And right there, we have a link where you could easily get your actual credit reports. Then we have another link here, creditsuite.com/consult, which is CONSULT. If you want, we'll do this for you. If you get in touch with us, we'll schedule an appointment with you. We'll pull your Credit Safe credit report and give it to you. Here's your business credit report from Credit Safe. And we'll go over your Experian report. We'll do a free search with Experian to see if you're listed with them. And we'll go over whatever your score and what's on your report. We can't give you Experian reports, DNB reports, Equifax reports. Equifax, DNB, and Experian won't allow us to give you the report, okay? Because most of the time when you're getting access to their credit reports, it's used for credit issuing decisions. So they won't allow you to be given the credit reports, but we can still go over your Experian with you and give you your Credit Safe report if that's something you're interested in. creditsuite.com/consult is where you'll get that actual link. So another reason for decline is not having credit with the reporting agencies. And let's look at what that looks like. So here's some actual business credit reports here. We're going to go over some actual business credit reports right here. Now, let me tell you how this kind of works. First of all, again, if you actually do follow us on Periscope or Facebook Live, then we do this live. We go over credit reports all the time. We show you what's on good credit reports, bad credit reports. If you're on our live streams, we'll pull your credit report, go over it with you. And if you want to get in touch with us there, just go to our main website, creditsuite.com. Top right, you'll find like our Instagram link and I think our Tumblr link, which we're now on, and Periscope and all that stuff. But Periscope and Facebook Live, we go over real reports like this all the time. This is snapshots from a real Experian report, and I'll give you an example of what this looks like. So here's a company here that has no trade lines at all. There's no trades. There's zero trade lines. There's zero records of the company existing. And you can see here that the score is 29. So the person's considered to be high risk because the best score is considered to be a 100 score. The lowest score is 0. So here's a company that they don't have any bad credit, right? There's none. There's no bad credit at all. I wish I could show you more than this, but there's nothing to show. That's the problem. So they have no trades, no accounts date beyond terms. UCC filing is not a bad thing. That just means they've had 3 loans in the past, which is probably how Experian may know they exist. They probably got revenue lending financing or merchant cash advance or something, but they have no trade lines. So this is an important note, something very important that I might as well tell you about while we're on this topic, is that a lot of times, if you go to get a merchant cash advance, for example, or revenue financing, this is the most common type of business loan that's out there. They may tell you that they report that information to the business credit reporting agencies, but that does not mean they report it as a trade line. What it means is they're reporting what's called a UCC filing, which basically is what tells the credit reporting agencies that, yes, you have an outstanding loan. It tells them, yes, this guy got a loan from me, but it won't show your payment history. So you don't build your credit with those kind of loans because they don't build your business credit in most cases. There are some lenders that do, and we often work with the ones that do because they help you build business credit. But most merchant cash advance lenders only report a UCC filing, and you get what you see here. The lender reported that you had a loan, didn't report any payment history, and now you're kind of screwed because now you have a 29 score out of 100. Experian saying you don't have very many active commercial accounts. You don't have commercial accounts with 1 to 30-day terms. Number of recent active commercial accounts is low. Number of commercial accounts include commercial leases is low. So what Experian's saying here is, dude, you ain't got no credit. You ain't got no credit. We don't know how to rate you, so we're instantly going to give you a 29. Very common. We see a lot of companies that have 28 and 29 scores and they have no credit. So this is what I was just telling you about. This is a big problem. You know, imagine having a $3 million a year revenue company and being denied for a $10,000 credit card when you have good personal credit. Can you imagine that? That's what we see. We see people come in and go, like, my mind is blown. I have good personal credit. My business does millions in revenue and I just got denied. How's this possible? Well, show us the denial. Well, the denial says you don't have business credit. Let's look at Experian to see what's going on. Boom, here you go. This is why you got denied. You've got the equivalent of a 400 credit score for your business. If this was a FICO score, it would be like having a 400 score. You're 29 out of 100. That's horrible. Well, how can I have horrible credit? Well, because you have no credit. Because the reporting agencies know you exist and you have no credit, so they give you a low score as a result. And you can see the end result of that. Then Experian says, bad person, high risk, and here's the recommended credit we're going to give you is $1,000. You know what's sad about this report? I'll show you. They've been in business for 10 years. Date of incorporation, 8/21/2006. Here's a company that's been in business for 10 years. They have a horrible score because they don't have any credit established. And now after being in business 10 years, Experian is telling credit issuers and lenders the most credit this person should be given is $1,000. This is why you need to build your business credit, because if you're applying for business credit, they look at your reports. If you're applying for a business credit card at your bank, they look at your reports. If you apply for business loans, they look at your reports. And if this is what they see because you have no credit established, then you'll often get denied. Even if you were going to get approved, you wouldn't get approved for very much money at all. Okay, now here's another example of somebody that does actually have some credit established, right? They have a $100 account and a $400 account, and then they got to $4,000 accounts and $9,900 accounts. Now notice here, the $9,900 account is an actual charge-off. This is a collection, a $10,000 collection on their credit report. And I'll show you what they got. They're getting recommended for $22,000 in credit. They have a 92 out of 100 score, even with a $10,000 collection on their credit report. How can this happen? It's simple, because they built their business credit. They got small trade lines with Uline and Quill and Gimplers and Seton, and they followed the exact steps that we outlined to build business credit. They got a bunch of little accounts. Then they started to get approved for more credit. Then they defaulted on one, but they have so many positive to offset the negative that the result is their scores are very high. And as a result of that score being very high, which I'm going backwards now, which is not the way I want to go. I want to go forward. They have a 92 score. Now check this out. This is actually kind of cool. You can see their score wasn't always that high, right? They went from a low score of 10 or 12. And in one quarter, they started to get some starter business credit accounts and shot up to 96 and 92. And now what's the end result of that? Well, the end result of that is that they now have a 92 out of 100 score. And now they're being recommended for over $20,000 in credit. You could see Dative Incorporated right here. This business has been open a year and a half. So we just looked at a business being in business for 10 years that had no business credit and has a 29 score. Then we looked at a business that's been open for a year and a half, has built their business credit, even has a charge off for 10 grand, still has a 92 score, and as a result, it's being recommended for 22 grand. So if you were going in to apply for a credit card at your bank, what would you rather get, a $1,000 credit card or 22,000? Well, what do you think determines the approval? You just saw it. You just saw exactly what lenders see. They're looking at this information and they'll often deny you or limit the amount you get approved just because of the amount of credit you actually have established. Okay, so you often get declined if you aren't listed with the reporting agencies or if you don't have established credit, as we just showed. Okay, you can also get denied if you don't have a credit score or have a low credit score with DNB, Equifax, and Experian. And as I just went through, you could easily have a low score just because you have no credit. So don't think that you have to default on the accounts to get low scores. If they know you exist, which they often do, because they get your data from a lot of different places, then they'll often deny you for credit just because you don't have enough credit established, okay? And here's another one example of somebody that only has one account. So this is somebody on Periscope that said, pull my business credit. I don't have any, but take a look and see what's there. We said, no problem. We pulled it, and this is what we found. Oh, you do have a credit, actually. What happened was you had a communications account, probably a cable bill, whatever it may be. You had a $500 balance. You defaulted on that account, and now your score's 12. And now all of a sudden, nobody will give you credit because they didn't focus on building any business credit, so they have no positive. They only had one negative account, and instead of now being a 29, they're at 12. And now Experian says, don't even give this person credit. Okay, and again, you're looking at a company here that's been established for 3 years. Look, you can't ignore this. You can't just not have business credit when you're trying to apply for loans or business credit cards. They're going to look at the same information I'm showing you. And if you were looking at the same information, what would your approval decision or denial decision be? Denied, right? Well, here's the problem. Computers are doing this. Computers are pulling your score. They're pulling the reasons for why your scores are low. They're pulling the credit recommendation and automatically making the determination based on that information. And yet here's another example of somebody that has zero credit across the board, no accounts, not even any UCC filings, okay, probably found out from a utility company they even exist, and their score's 28 and they have $1,000 credit. Like I said, we see this all the time. If the business reporting agencies like Experian know you exist and you have no credit established, they will give you a 28 or 29 score. They give you automatically by default a failing score because you have no credit. If you have bad credit, only bad credit, they give you a 10, 12, 0 score. Okay, if you have good credit, they give you 80, 90 score, high credit recommendations, and that's how you're getting approved for higher credit limits at banks and with credit cards. So conventional bank loans, as we talked about, look at 3 things. They look at bank credit, business credit, and personal credit. Remember, only big banks like Wells Fargo and the such look at these. Alternative lenders, people that lend based on your 401k or your stocks, or equipment lenders or equipment leasers, or cash advance companies or revenue lending companies, any of those type only look at either or both personal and business credit. They don't look at bank credit. So as I talked about before, you don't have to have a bunch of money in the bank unless you're applying for a bank loan. If you're applying for an alternative loan, like a cash advance, you need to know they absolutely will pull your business credit and deny you based on it. I have a stack of denials from On Deck of people that came to us for loans, hadn't built their business credit yet, said, oh, I don't want to build my business credit, I just want a loan. And then On Deck denies them, or another lender denies them, and the reasons that they don't have business credit established. So I'm not saying this is necessary. In a lot of cases, you may get approved with limited or no business credit, but in a lot of cases, alternative lenders will even deny you based on business credit or personal credit. And again, it depends on the type of loan. If you go for a cash advance or revenue lending, they're not necessarily going to make the approval decision based on personal credit. We've got lenders that if you have consistent cash flow, will approve you without even a personal credit check. We've seen $50,000 plus approvals with no personal credit check just because the other factors are low risk. Others, like unsecured financing, all they look at is personal credit. But you need to know that what you keep in your bank account only matters if you're applying for big bank loans, and personal credit, business credit will be looked at for alternative financing. Some type of financing like cash advances, business or personal credit doesn't really matter. And other types of financing like unsecured financing, it absolutely matters. The whole decision is based on that. So conventional loans, you'll need good personal credit, bank credit, and business credit. Alternative lenders require average or so personal or business credit. Most alternative lenders that lend based on collateral or cash flow don't really care about your personal credit. It can be average or even worse and still get approved. And unless your business credit's trashed, you still have a pretty good chance of getting approved, but they will look at it. One reason you may get denied for a loan is that your credit quality is bad. Now you know, like, okay, I'm going to go apply for a bank. What did Ty say? Oh, Ty said my bank credit, personal credit, and business credit's all going to be looked at. I saw those examples. I know I need to establish some business credit. I need to work on my personal credit, and I need to keep money in my bank account. I'm going to apply for a merchant cash advance. What should I be prepared for? Well, my personal credit, Ty said, it's not going to be a big deal. I probably want to look at my business credit because they will look at it. And what I keep in my bank account, well, it obviously will matter if you're applying for something like a cash advance that looks basically strictly on your cash flow. Okay, so we've also, bank credit is possible denial reasons is that you have less than $10,000 on average in your bank account. And this is if you're applying with your bank, with Wells Fargo, Chase, etc., with a conventional bank. They'll deny you usually if you have less than 10 grand in your bank account, if you've mismanaged the bank account with non-sufficient funds, etc. Personal credit possible denials with the big banks include dents and dings. Dents and dings, I mean that we've seen 750 credit scores, 780 credit scores denied at big banks for SBA loans just because they have some minor derogatory accounts 6 years ago on their credit report. So they really want you to have good credit for the big banks. Active bankruptcy will be an issue with alternative lenders. Alternative lenders don't care about dents and dings. They don't even care if your credit's bad. But if you're trying to get a cash advance and you're currently in BK, then that absolutely could be an issue. Business credit possible denials include that you have no business credit established. I just showed the result of what happens there. Bad business credit or low business credit scores, that can get you denied for both alternative and conventional loans. Okay, so to go back through that, if you're applying at your bank, well then what you keep in your bank account can get you denied because your bank credit score will be looked at. So if you keep less than 10 grand or mismanage it, it's a problem. That's not usually a problem with a lot of alternative lenders. If you are talking about personal credit, well, then you can get alternative credit like collateral-based financing, revenue lending, cash advances, even with damage to your personal credit. Okay, but if you're in active bankruptcy, even with them, it could be an issue. And then business credit, not having business credit or having real low scores can get you denied at both. It can get you denied at alternative lenders, and it can get you denied again at banks. And again, I've listed that website, creditsuite.com/EIN. It just gives you a free 4-step guide on building business credit if you haven't done so already. Okay, to get a bank loan, you must be lendable or have a necessary criteria required to get approved. So setting up your business credibility, as we talked about, is the first and most important step. And once you do this, you'll need to determine if you can get a business loan as well, if you'll actually meet their criteria to be able to qualify. And let me take a quick break here just to see if I have any other questions because I had some other ones pop in. What if your address is STE instead of a PO box? I've never seen STE. So you're talking about suite, and that would usually, STE isn't a problem. PO boxes on applications will often not even be looked at. Okay, but STE is such a suite, usually isn't an issue unless it's a UPS address. In some cases, the creditors, that could create an issue. I have a home-based, what's up, Smith? I have a home-based business legally registered with the Secretary of State. Could it be a reason to get denied for credit or loan applications? Absolutely, if that's the same address. Well, let's talk about that. You have a home address listed with the Secretary of State. Is that the address you're putting on the application? Yes, that could get you denied. If you're putting a different address on the application than what's listed with Secretary of State, that difference in address could get you denied. The bottom line is follow the advice here. Get a physical business address or a virtual address or a UPS and use that address with the Secretary of State. It's pretty simple to change records with the Secretary of State. Every state's website has an easy way to do that. How can you change your business address? Well, it depends on who you're talking about. Nathaniel, if you're dealing with a company like Yext, we actually just moved into a new location here in Tampa, or not outside of Tampa, actually, in a city called Land O'Lakes. And when we changed our address, we just updated our address with Yext. Yext changed all of our online listings. And then we notified anybody that sent mail to us that our address had changed to. Our bank, we notified our credit card companies, we notified the utility companies, we notified everybody. And the people we forgot about, we kept getting mail at our old address, and we notified them and contacted them as well. So that's the best way. Hopefully that kind of gives you some insight there. What are the ranges of bank scores? 4 and 5. Low 4, mid 4, high 4, low 5, mid 5, high 5. And to be lendable, you have to have a low 5 or higher, which is 10,000 on average in your bank account. To get the highest bank score, which is a high 5, you need to have $70,000 in your bank account on average. What is the effect of maxing out business credit cards? With Equifax and with Dun & Bradstreet, not much, because their scores are based on payment history and that's it. With Experian, it will matter because Experian works kind of close to like FICO, where it takes into account other factors, including utilization. So maxing out business credit cards that report to the business credit reporting agencies could have an impact with Experian. If you're paying all your bills good, it won't with Equifax or with DMB. But you got to be careful. A lot of people think they have business credit cards. They report on the consumer credit reports. And if you have like a Capital One Spark card that reports on your consumer credit report, you max it out, man, you're screwed. Like your credit scores will plummet if you max out a credit card that reports on your personal credit report, because utilization affects 30% of your consumer FICO score. And one more question, and then I'll go ahead and finish up here. Okay, so good afternoon, Ty. My trade lines finally posted on DMB and Equifax. Charlton, that is awesome. Usually it takes about 30 to 90 days for those accounts to report once you get them approved. And it could take longer if the credit issuer only reports quarterly. So back here, and then I'll wrap up. And then if you have any other questions, I'll make sure that I get those answered as well. Okay, so once you do this, you'll determine if you can get a business loan as well. And again, if you're interested in getting or seeing how lendable you are, you can go to our website, creditsuite.com/get funding, no dash, just get, G-E-T, the word funding, F-U-N-D-I-N-G, and you plug right into our finance qualifier. And our finance qualifier plugs in with every legitimate funding source that's out there today, and it will just tell you if you qualify or you don't qualify. And if you do qualify, like we'll even reach out and say, hey man, you qualify, here's the deal, what you qualify for. Do you want to move forward and get a loan? And if you do, great. It doesn't cost you a dime to get financing with us. Some lenders pay us on the back end, some don't. But again, it's free to find out if you qualify. You just got to be lendable, which we'll talk about here in a minute. So to get a business loan at a conventional bank, a big bank, Wells Fargo, one of those guys, you got to have good personal business and bank credit. You got to have collateral for about 50% of what you're borrowing. You have to have cash flow and profits on your tax returns that show that you're increasing year to year. Here's the criteria. If you don't have this, don't walk into a bank and think you're going to need a loan. It ain't going to happen. You got to have good personal credit, good bank credit, good business credit to walk into a Wells Fargo, Bank of America type of bank to get approved, collateral for 50% of what you're borrowing, and good profit per your tax returns. Okay. You also, if you want to get approved with an alternative lender, you don't need any of that stuff. What you need is cash flow of $10,000 a month or more, or good personal credit, 700 scores or more, or some kind of collateral, equipment, inventory, account receivables, 401ks. You do not need all of these. You only need one of these. If you have one of these, you could typically get approved for a loan at an alternative lender. And again, I just showed you what you'd need to get approved for an actual bank loan. And if you have none of these, well, then that's where business credit's your best option. If you don't have collateral, cash flow, or good credit, you have none of those, you are not lendable. You will not walk into a bank and get a loan. That's where what we say is that's when you want to build a credibility point, build your business credit. That will help make you lendable by building your business credit. So you can still get high limit business credit accounts, even if you don't have cash flow, credit, or collateral, but you'll need one of those three things to get approved with an alternative lender for a loan. If you don't have one of those things, you could still get approved for business credit. And again, you can go to creditsuite.com/get funding to actually get approved for a business loan. You can also go to creditsuite.com/consult if you want to talk to us more about business credit building and get your free business credit report. Even if you can get a business loan, keep in mind your business credit quality is going to determine whether you get approved or denied, the interest rate you'll pay, the loan term you'll get, and the loan amount you'll receive. And you just saw that in real time. We looked at credit reports. If you're on the podcast, then go to creditsuite.com/EIN, get on our list so you can actually come to the webinar and see physically some of the things that are happening as well. But again, your business credit quality is going to determine if you're approved or denied, as we talked about, the actual rate you'll pay. And so a lot of people email me and say, what kind of rate am I going to pay? Well, how's your business credit quality? Because that will often determine the kind of loans or credit card rates you pay, how long of a loan term you'll get, even the loan amount. And we just looked at some real examples of how they recommend how much you're approved for based on what's on your reports. Make sure you build your business credibility, what we just talked about in the very biggest part of the actual show today. By doing this, you can often get an automatic approval, which is our goal. But if you don't meet this credibility criteria, you're often going to get denied or get pushed to a manual review, which is the whole point of the show today, is to try to get you to prevent that from happening. Business credit's obtainable even if you can't get a loan, and it gets you better terms when you can. So that's something you should consider no matter what you do. So I'm going to have to wrap this up because I'm already a couple minutes late to my next meeting. It's about 2 after. But again, if you want some more information, then feel free to reach out to us. You can go to creditsuite.com to get more information. You can give us a call at 877-600-2487. You can email us info@creditsuite.com. You can also grab your free 4-step guide on creditsuite.com/EIN. And if you want to talk to us more about business credit, even get your free business credit report, go to creditsuite.com/consult. I'm going to do about 3 questions here, and then I have to go because I'm already a few minutes late to my next meeting. My business is a credit repair company. Name also states credit. If I change the name, the website also talks about credit. Well, look, like I said, Jim, you can have credit in your name. That's okay. I don't think there's anything wrong with that. But just know that you may get some automatic denials or manual reviews because of it. So if everything else is good and everything else looks good, you probably still get approved for credit cards. Loans are a little tougher, but as you get into loans, they're going to know your industry anyways because they're going to look at your website and all those details. A lot of credit cards, they don't look at your website. So credit cards, you can automatically get approved or denied just based on your business name. But look, our name is Credit Suite. We don't care. We just know that it's going to be harder for us to get loans and harder for us to get credit. We've accepted that. We're okay with that. We would rather have a name that's closer to indicate what we do than care about that. If you feel the same way, great. If you don't, just consider that it can be a barrier. What's an alternative lender? Ardeen, to me, an alternative lender is anybody that's an alternative lender to conventional banks. Somebody that's not a Bank of America, Wells Fargo, Chase, somebody not offering SBA loans, but offering an alternative way to get money other than the big banks. And On Deck is a perfect example. They're a big publicly traded company that deals with merchant cash advances, revenue lending. They're an alternative to the big bank because you don't need to meet the same criteria as what you do with the big banks. Vaughn, no problem. Thank you. Ardeen, thank you. Thank you. Very important. Kevin, appreciate it. And Nathaniel, thank you all. Thank you very, very much for coming today. I hope you got a lot of good info. My goal, as always, is that you leave and go, okay, wow, that's a lot of information, but a lot of good information that I didn't know a lot of before I came on. And now you can apply that to have the best chance of getting approved for credit financing. And remember, we can help be that middle person for you, even get you better rates than you'll often get on your own. We deal with SBA loans and all different types of alternative loans. So you can go to creditsuite.com/get funding to get approved or pre-qualify, or just go to creditsuite.com/consult. We'll meet with you. You'll talk with somebody on on my team right on the other side of the wall here from where I am, and we'll get you a free business credit report, go through the options of which you can qualify for credit loan wise, and talk to you a little bit more. So thanks everybody very much for taking the time to attend today. I hope you have a great day, and I hope you have an awesome rest of the week. Thanks everybody.